Trump's controversial refugee policy and either stream of earnings. Look at the U.S. stocks recording their worst day yesterday in the year 2017 after President Trump signed an executive order to temporarily bar entry into the U.S. to citizens from 7 countries. On the data front, Tuesday we'll see employment cost index, the S&P Chase Sheila HPI and Chicago PMI. That's the Purchasing Managers Index. That's before 9:45 a.m. Eastern. Consumer confidence and housing vacancies are scheduled to be released at 10 a.m. Eastern, back to back. On the earnings front, we're looking at ExxonMobil, MasterCard, Pfizer, the 3rd largest multinational, bringing money into the U.S. The NASDAQ, OMX, Nintendo, Xerox, and UPS are among companies of interest scheduled to report before the bell. Meantime, Apple and the U.S. Steel will be reporting after market close. Right now, we're looking at the Dow Jones futures about 0.17 in the red. Meantime, Asian markets fell Tuesday with Japanese shares sharply down, tracking declines on Wall Street overnight as G2 spread around the world over a new immigration measure taken by the Trump administration. The Nikkei stock average dropped 327.5 points, while the Topix fell 22.1 points. The Bank of Japan kept its policy stance unchanged, but raises a GDP forecast to 1.4% for the current fiscal year ending March the 31st. From a previous prediction of 1.0% growth. That was last October. In Australia, the benchmark ASX 200 was down 40.6%, a point, I beg your pardon. Ooh, that would be massive. In South Korea, the Kospi was down just 16.02 basis points. Back at home, Nigeria's Treasury bill market was bearish on Monday, with average yield expanding 16 basis points, around 18.21%. However, investors were upbeat in the Naira bond market, average yield contracting by 11 basis points to 16.79%. Today is the final trading day in January. How time flies. So let's talk to a fixed income dealer with Access Bank, Mosumola Gbadamosi. Good afternoon, Mosumola, and thanks for coming through on the program. Okay, I guess we lost Mosumola there, but we'll talk about the month of January when we look at the market performance. This was a very nice way to start the new month. We've seen billions and billions, more than half a trillion naira in treasury bills auctions by the central bank. And of course, the DMO got a very nice bond auction to start the new year, the first auction in 2017. Let's get Mosumola back on the phone to talk to us. We appreciate that you're coming through on the program. Let's get a bit of this conversation up and running. Are you there? Oh, I guess we lost again. Let's just move on and check a bit of the stories as far as the fixed income is concerned. Nigeria will be making a major move next week when the FMDQ-OTC Securities Exchange signed a new deal with the S&P Dow Jones Industrial Average to roll out a new index that will track Nigeria's fixed income. That event is scheduled for February the 7th, and it's something we're watching very closely here at Channels Television. Will get that event out for you. But now let's move on to the commodity side of things, where we're looking at Nigeria's oil exports is expected to receive a boost, well, perhaps at half year, when a major export facility of Trans-Forcados pipeline, which was shut for most of 2016, is said to be reopened. Forcados, Nigeria's major export pipeline, was hit severely by militants last year. The first on a subsea section in February last year, almost a year. What would this mean for Nigeria's oil exports being touted to breach about 1.9 million barrels per day in 2017? Let's get Damilare Adesola, who is a research analyst with financial derivatives, to talk to us via Skype from downtown Lagos. Damilare, good afternoon, and thanks for coming through.
Good afternoon, both.
It's taken a year for us to get Trans-Forcados back on the line, and now it's not even set to reopen until June. This is good news, but this is really good news.
Yes, it is, in fact, very, very good news. But we're under attempt to actually start it back up. There was an attempt in October, but then once they got it running, it took another 2 weeks for the militants to attack again. So I don't think the issue is not really with the fact of when it's going to open, is how sustainable this is going to be, given that the militancy operations haven't really been contained. So that is really what we are concerned about at the moment.
Yeah, some analysts are forecasting 1.8 million barrels, 1.9 million barrels per day. It'll be a shade or a shy of 2 million barrels per day for this year, for 2017. We're down 1 month into the new year, so time flies, isn't it? So we have 11 months to go. Do you still see 1.8, 1.9 million barrels per day on the radar for Nigeria this year?
Yes, definitely we do. We see us coming very, very close to the budget of 2.2 million barrels per day. But then obviously, like I mentioned earlier, it's all down to how much the government can negotiate with the Niger Delta Avengers and reach a decision so as to curb the attacks, because really the production, aside from the maintenance issues and the strikes here and there, really what really affected the production throughout 2016 was the vandalism and the sabotage on pipelines. So once that is fixed, and the government has started rolling out different schemes to talk to stakeholders and leaders of the Niger Delta area. So once that is done, and once that is completed, and they're convinced that of the sincerity of the government, we expect production to be ramped up significantly.
But I'm sure you watch the global oil markets on a daily basis. Look at the news coming out of the U.S. The oil rig count is climbing with the shale production, so prices are now being affected. We're looking at crude oil, WTI now about 0.2% down today. We lost the $55 per barrel. We're doing around $52 on the West Texas Intermediate now. Are you worried about this level of the news coming out of the U.S. trying to push the OPEC production court to the side?
Yes, the U.S. production last week, the rig count moved up by about 15 to about 566 up until last week. So yes, definitely this will cap the gains from the OPEC deal, but then the OPEC deal will still have a significant impact on prices, at least to maintain it at the current level of about $55 per barrel. So all we just need is for the OPEC leaders and the members and the non-members as well, Russia, to just continue to stay with the deal and not to just how sometimes all these deals are, but just the compliance. Once they comply with it and they adhere to the deal, we expect that the prices will stay as they are for the whole of 2017.
Okay, thank you so much, Damilare Adeshola from Financial Derivatives, a research analyst. Thank you for your time today. Let's get together some other time. We'll take a break. When we come back, Kenya's central bank holding its interest rate unchanged.